Trade deals coming soon. How many times have we heard that? How many times can the market rally on that promise? Well, the market gave it another chance today when Treasury Secretary Bessent said, believe we will see more trade deals coming very quickly. The markets didn't stay up for long. And as the day rolled on, we sort of rolled over. I'm going to take you into the SPY and give you some important candle patterns that are forming there. I mentioned the other day that for the very first time, I'd begun to see stealth selling, which means that price is climbing, but momentum is fading. And I can tell you that we're in some very concerning patterns I want you to see with your own eyes. I'm going to recap some trades for you today, and I'm going to give you a new hot trade, something that I'm going to be watching to invest in and hold over the summer. This isn't going to be a quick 24-hour pop like some of my other hot plays have been. This is one that's going to take a little time to cook. I'm going to give you the short and the long trend lines. We're going to take the trade after we get confirmation on the chart. This is the Stocks with Josh show. Thank you for joining me. Thank you for dropping a heart in the comments, smashing the like, and if you need help trading these markets and interpreting what's going to happen next, I make a ton of bold predictions on this show. Hit the like and subscribe and join the community. All right, let's talk first about the SPY. I want to dive right into three patterns that everybody needs to lay eyes on. Let's go check out that chart. All right, you might have guessed it. Everybody's talking about it. We've got a bearish ascending wedge. When these break, they always break to the downside. Ascending wedges do not shoot higher. However, we can remain in this wedge for a number of days. Where do I think we're ultimately heading? Because we haven't let the wedge go yet. We're clearly climbing back to 608. We're going to have to watch the chart very carefully at that time to see what comes next. Now, I've got this moving average line in the blue on the chart, and that's your 50 EMA. That's your 50 exponential moving average of price on the S&P 500. I also have a couple other important price points marked. I've made mention of this in the past, that we were likely moving upwards to 608 once we confirmed above 595, which we absolutely did. We back tested it and we've continued to climb. If we begin to fall apart and we lose this wedge, the very next area in focus is going to be a bounce off of this 50-day moving average, which we should stay on top of. And if we do bounce there, then the move is healthy and we're going to continue higher and there's going to be nothing to worry about. It'll just be a small correction. If we lose the 50 and we lose 575, well, it means that the floor is falling out and we're going much lower. Not calling for that now. But let's go back in time and let's see when we've had similar V-shaped recoveries like we're enjoying right now, how did the price action interact on the daily chart with that 50 EMA? Let's go back and check it out. Now, in particular, the last time that we had a V-shape like this, well, you guys, if you can guess it, it was the 2020 freak sell-off that we had, gave a crash down that eventually recovered. But I want to point something out to you. It bounced off the 50 a lot before making that new high. You could count a number of these as bounces, and eventually we ran up and we got near the previous top, not as close to the top as we are right now, and then we pulled back and had to bounce off that 50 two more times over the course of time. Over the course of a month and a half, we eventually broke all the way to the all-time high and went a little higher, and then eventually we had to come back and move sideways for a while. So this would be the sideways action before we continued higher. Now, let's just kind of keep this in mind, how many times in a corrective move that price action will come back and find support on the 50 after having a major sell-off like this. Well, you can see it with your own eyes. 1, 2, 3, 4, 5 before we got to a brand new all-time high. Now let's go back and look at where we're at and what we've done with the recent price action move off of these bottoms. Well, other than this one bounce that we had right after we crossed, we haven't tested the 50 in quite a while. We're well into a couple weeks here, if not more, and we're pushing up towards the all-time highs. And the number one thing that I want you guys to recognize from that is that a bounce off the 50, and a correction back to the 50 would be very healthy and very normal. And whereas we did it 5 times before making a new high back in 2020, we have only done it 1 time. And so these markets are running very, very hot. I want to point out one more thing that I want you guys to be keeping your eyes on in the coming days on the S&P 500. And it was one of my followers in the Discord that pointed this out to me. And it is an inverse head and shoulders pattern with a neckline right at that 608 level. So it's going to look something like this. If we put that 575 back on, you can see the left shoulder is a move from 608 to 575 back to the neckline. And then you get the head that brought us all the way down. We're very near recovering to 608. And if we tap 608 and decide to pull back from there, it would actually be a completion of a bullish pattern if we did come back and test that 575 and come back to the neckline in the next 2 months. So this is just something to keep your eyes on. It's something that could become relevant further down the road. Now, the pattern that is undeniable and needs respect right now, today, is that rising bearish wedge. In addition to that, when you go into the momentum indicators on the SPY, I mentioned in yesterday's video that we're seeing momentum fade as price is rising. Normally that signals a reversal. So when we get up to that 608, I am expecting some form of a pullback, possibly the creation of that right shoulder in an extreme scenario, or in a less extreme move, it would simply be a pullback to the 50 EMA and a potential bounce there, as it was very normal to do that back in 2020 during the recovery period. We went on to reach beautiful highs after 2020. And so if we're going to have a strong push higher, we need the markets to cooperate and build some structure for the legs ahead. What do you guys think of the SPY right now? Is this a good time to go long, or is it a good time to take profits? I'm not going to make those decisions for you, but I will bring you hot plays. And on that subject, let's talk about one of the stocks in my very last video that I covered, which was Circle, CRCL. This is the stablecoin USDC. And I want to point out what happened because I gave you a breakout and breakdown scenario. Let's go look at that chart real quick. Yesterday, we talked about the fact that if the price crossed above this 118, we'd have an immediate target up to 125. But alternatively, if it crossed beneath 114, it would have a straight shot down to 105. Well, today the path was chosen. This was a very easy trade setup for a very strong profit move down in puts down to 105. We haven't quite hit it, but the day's not over and we're moving towards it right now. Let me know, did you take the trade? Did you screenshot that and take the trade today? It would have been very, very profitable. Now I'm going to give you another one in here in just a few minutes. But before I do, I want to talk about the Stocks with Josh Discord. I got a beautiful scalp using my trade setups. I provide those 5 days a week, half an hour before the market opens. I take them myself. Let me show you which one I took because it absolutely printed. And then, of course, I'm going to ask the question, did you get the trade setup? Did you take it? And how much money did you make? Let me know in the comment section. It was an easy day taking these trade setups. Let's go look at the Tesla chart. So as you can see, we had a rejection scenario for 328.70. That's in my trade setups before the market opens. We had an incredible rejection candle at that level. We had no candles close above 328. If a candle had closed above 328.70, that would have negated the rejection setup. But the fact is, none of them did. We only wicked above it and ultimately got a very ugly candle that signaled the move down. I took that position at 328.70 for a move down to my very first target of 324.80. This was a very easy win, a nice 30% profit for me on a large position, did very well. Now, I had to go on and move on to other things, but if I had held that position, this for sure was a 100% banger today, moving all the way down to one of my lower targets of 318.60. Let me know what you guys did with Tesla. Had you heeded my warning over the last 2 videos that this was not looking good and it had some breakdown in the charts ahead. Well, right now it's breaking down. But I'm going to tell you that I don't ever get too bearish or too bullish, even though I might be sounding pretty bearish on Tesla right now. I try not to get ahead of the charts. That's why I do these trade setups and I take each level as they come. As of today, those levels were going down. But the big cliff that it would fall off would be a confirmation beneath 318. And so far, it hasn't done that. We could go on and test up a little higher before breaking down further. But I can tell you that between now and tomorrow, if we lose that 318 again, that's going to mean a flush to the downside. Where would it go? It would go straight down to 309. That's what I think looking at the charts. Let me know if you guys see it any different. But hear me. We're following the charts. Don't front run the move. Respect the trend lines. Those are the ones that once they trigger, they give you the trade, just like we saw with Circle in the last 24 hours. And before we get into the next hot trade setup, if you guys want to join me for live trading, I'm going to do it tomorrow in the Stocks with Josh Discord at Market Open. I'm sure something's going to give us some liquidity because the markets are heating up. In addition to that, if you want to get access to my trade setups 5 days a week, then come to the website, www.stockswithjosh.com. It's the name of the show. You can find me there and connect with the pro trading community, Chartgoat University. Check it out. Okay, what is the hot trade that I'm going to be talking to you guys about today? Well, right now, I'm calling it hot because I see opportunity in the charts. Doesn't mean you buy and you load up and you blindly follow. I want to make a case for this stock because it could move up or down. I'm going to give you the important trigger points for when I'm going to enter. And then after I enter, I'm going to protect my capital with a stop loss. I'm going to lay all of that out for you guys today. We're going to be talking about the trade desk. And you might think when you hear the name of that company, you might think, is this got something to do with day trading? No, this is a platform that actually sells ad space, but in a very sophisticated way. The ticker is TTD. It's called the Trade Desk. The Trade Desk runs a powerful ad tech platform that helps companies buy digital ads on streaming TV, websites, and mobile apps through AI automation. So this is quite a powerful company that has been doing quite well. And this stock price just back in late 2024 was up at $140, and it absolutely collapsed, not because they weren't crushing it with earnings, but they gave weak forward guidance. And at the time, people thought it was expensive, and the stock absolutely capitulated. How far down did it go? Well, here in 2025, it went down 70%. Now, we're not picking it up off those lows. I wish that we were. But we have seen this thing have a good earnings here recently and have a nice move higher. And since then, it's been consolidating, but it's been consolidating above its moving averages, which is a nice place to consider a long-term position for this to continue to trend higher, which simply means there's more room to the upside for TTD right now. At the time when it crashed, the market feared that ad budgets were tightening in lieu of a potential coming recession. That's right, the recession. The same recession that is yet to come because it's possible that AI has beaten that recession in 2023, 2024, and it might do it again in 2025. I cannot guarantee that. However, there's some that argue that their business might have a competitive edge because they only get paid if the ad works, which is different than companies like Google and Facebook, where they get paid no matter what happens with your ad. If the economy avoids a deep recession, TTD could be a quiet summer winner. But if a recession hits, TTD very likely will face continued selling pressure like everything else. But still, their efficient performance-based ad system could help it capture more budget-conscious advertisers looking for a better ROI, return on investment. So they could be competitive in the ad space and do better than people had feared. After it had gotten extremely oversold, a lot of smart money rolled back into it, and they may not be too quick to let it go. How do I know that? How do I know that smart money took a big position and wants to go long on this? Well, you start looking at unusual options activity, and that's the big money that gets put in bets on either calls to the upside or puts to the downside. How have they positioned themselves? Well, currently, institutional investors are favoring call options with a 1.4x more money in calls than puts in the short term. Overall, institutions and retail traders are positioned 62% of all the positions in options are calls, while only 38% of the positions are puts. So it shows you that smart money largely believes that this is going to continue higher. So it's time to look at the chart. What does it tell us? When exactly should we get in? Is there a trigger for this opportunity? You absolutely know there is. Let's go check out that chart together. All right, let's start with a big picture view of price action over the last couple of years. You can see that when we were up here at $141, this had an unbelievable exponential drop going all the way down to $42. This was the time to load up. This thing, if it fully recovered, would have quite a multiple return back to its top. Now we had a huge jump and gap above the 50. Instead of back testing and rejecting, we had a massive volume spike and we jumped over the 50. And since then, we've been consolidating in this nice little beautiful pattern. And we're finally coming back and back testing the 50. Now, why is that important? It's important because this is the spot that it would naturally bounce if it were going to have a continuation higher. And so this is an extremely healthy thing that it's doing right now. And it's simply coming back and back testing that breakout. What do I think will happen? Well, as long as the market supports it, I think this could potentially lead to a continuation. Let's go into the 4-hour chart and we'll throw on our important lines in the sand. Here we go, guys. This is the game plan altogether. And you can see right now that we're testing this 70-20. Now, this is a very critical area. Now, if we close a 4-hour candle beneath this 70-20, then we're going to confirm a potential move all the way back to 61.80, right? Which actually, I would take the 61.80 trade to go long in that scenario. But let's not try to look so far down the road today because we're very close to a place where we could dip and bounce and recover. So don't front run the down move. It has to close on a 4-hour candle under 70.20 for it to be confirmed back to 61.80. Now, if we end up bouncing and we get a continuation and we get above 74.60, this is the next spot to go long on TTD. This is the spot that confirms that we're going to then go up and make a local high as 82.50. This would be a very, very nice play. So I want you to snap those lines on your chart. Okay, I want to point something out to you that I've got alerts here on my trend lines so that if the price closes beneath this 70.20, it'll alert me and I will have the opportunity to watch it and look for a continuation down to 61.80, and the same if it closes above 74.50. My alarm here will alert me and I can take a position to go long. So I like TTD to definitely be on the watch list. I think this has opportunity and it just simply got beat down too far. Now, we didn't pick it up when it was hot and breaking out on the last earnings, but we're going to get earnings again ahead. And it makes sense to me that it's pulled back to this important level where it could find support. So we're going to watch those trend lines very carefully. Now, another area that we could potentially get in early rather than waiting for it to get all the way up to 74.60 is if we lose that 70.20, but we recover it and then continue higher, well, that could confirm the move up to 74.60. For the time being, this is largely range bound. Volume has cooled, but at some point, if the macro environment stays relatively consistent and we get closer to the next earnings, you're going to see people begin to bet on this possibly having another good earnings report and it possibly having another push higher all the way up potentially to that $80 mark that I highlighted or much higher. Let me know what you guys are doing with TTD and let me know if you're going to put it on your watch list. Thank you for joining me. Hit this subscribe if you want to keep getting setups like this and chart explanations, and come over to the Stocks with Josh Discord before tomorrow's live trade session. We've been making money. I'll let you know how it turns out tomorrow, but I think I know how it might turn out. We hopefully are going to have a winning session, but we'll see. Talk to you guys about that tomorrow. Peace and blessings. Take care. Have a wonderful evening.